Are you looking to buy a home here in Florida in the next couple years? Today on this podcast, we're talking about interest rates and closing costs. So no further ado, let's get on to the podcast. We have our real estate team here today, which is going to be an ongoing series, and we're very fortunate to have Chip Jewell in today. So as we get into talking about things here in the market, one of the most important things that people have to worry about is getting a mortgage. You know, the rates have been going through crazy. You know, Chip is a part of our team. He always has the answers for us. If he doesn't have it in that second, he has it within minutes. So we're happy to welcome Chip. We also have Jim Kelly, our data wonderful guy over here, which I don't know if he likes that title, but he is very good with reports and everything. And then we have Marius over in the backside over here as our engineer. He's our photographer, video master, and we're all realtors trying to help people get in this market. So, you know, welcome, Chip. Thanks for coming in.
Yeah,
we appreciate it. We want to keep this interesting, so we hope that when you guys see these podcasts, make sure you comment below. Tell us what you want to hear about. We'll research it and get them information right back out to you. We love the format. We want to get everybody involved. We want you to know who we are and how we can help you in this market and really help you understand about what living in Sarasota is like. So today, why we have Chip in is so important is because it's the number one thing that's holding people back right now is mortgage rates. I mean, you see all these reports and everything's going on, and you just, you know, everybody's frozen because of mortgage rates. But people still are having babies, retiring, moving, and people still need to live. And people don't want to pay $3,000 a month for a two-bedroom apartment. So hopefully here we can talk about the troubles of getting a loan and maybe soften some of that pain. And then you can reach out to us, and especially with Chip. He's got his QR code here. There's plenty of ways to reach. We're going to put all of his contact information down. We're here in October of 2023. We didn't have a rate hike the last session that I know of. But, you know, one thing that most people don't know, they hear all that news, but you're dealing with rate changes on a daily basis.
Yeah.
So I don't think people quite understand when they hear that the Fed does this, and then you're like, well, no, we look at it daily. There's two different things. So maybe you can give us a quick, you know, understanding of, you know, what's going on with the market with interest rates now.
Thanks for having me.
Yeah.
Well, we know that the feds are trying to keep the economy straight, and they're not doing the best job of it. I mean,
Right.
Nothing we can do about that.
Right.
The rates are the rates. The home value, as you know, where they're going to continue to climb.
Supply and
especially
demand.
around here. Yeah, we have low supply, high demand. For us on the mortgage side, yeah, the rates are just unfortunately climbing. I think we're going to push into eights here shortly from
By the end of the year.
What I'm reading, yeah, and like we talked about last week,
Yeah.
possibly looking at tens
Next year.
next year,
First quarter.
Yeah, and I hate to be the bearer of bad news, but I'm a realist. You know,
Well, we want to prepare for it, right? I mean, you
Yeah.
know, we also want to be realistic, you know, to try to go with some pipe dream or something, you know, this is what the table we have to work with today, you know.
Right.
So,
Well, that goes talking about the Fed. The housing market makes up 17% of our economy. So kind of the portion of the reason why we're at far as high inflation is because the home prices are inflated right now. So the reason why we're going to see these protracted rates for a long time is because they want to keep that the home prices down as much as they can. So, you know, rates keep going up, inflation, how do they try to cap that and keep it down?
and I think it's a nationwide focus, and, you know, we're very hyper local here, being in Sarasota, Manatee area, Lakewood Ranch, and even going up into the Tampa area and down in, you know, to Naples. We kind of focus in the center of that. But, you know, what's happening nationally, we have to handle it locally. So if you want to move to Lakewood Ranch, Sarasota, Bradenton area, you know, we have to be on top of that news on a daily basis and how the interest rates are affecting what the builders are doing and what the resales are doing. And we have several listings right now that are kind of facing some of that. And Jim, you know, you've been dealing with one of our listings that has some price things, and some of the, and I think what people don't realize is they're competing against the builders still. The builders offer some incentives. So yeah, the market's staying strong, but you still got to be realistic about your price. You can't grab last year's prices and be, you know, $20,000 over on a $500,000 house, because there is a little bit of options. And plus the rates are so high. People are like, I won't take that chance, you know? So,
And you have a license. Dan always kind of quoted, there's certain things that we can talk about, we can't talk about. We are not licensed lenders. We're not licensed brokers. That's why we partner up with lenders, because that's that real conversation I had yesterday, and hopefully we'll get into it later about the 3-2-1 buy down and being competitive with builders because they are offering incentives. So we get the knowledge, and then we partner up with Chip, and then he gives us enough information, but then have that collaboration where he is explaining it fully to our customers.
Yeah, it's nice to have Chip part of our team because it's just turn him over. I'm not the expert. You're the expert. You want to know about Lakewood Ranch? Yeah, I'll get you there. Want to know about loans? Yeah, you call Chip. So, but Jimmy, we were talking the other day about rates or something. Did you have a question you wanted to check in with Chip about rates? No, I'm sorry. It was about the down payments. You were talking. Was it down payments? Who was it talking about? You?
Marius.
You were talking about down payments.
Marius was talking about down payments.
I think you guys were talking about down payments, and
we always talk about down payments.
Yeah. So
Right. Basically, I wanted to talk to Chip about what are some options for, let's say, first-time home buyers. That's the first question I get. Hey, I'm a first-time home buyer. What are the programs out there to help me? I don't have much saved.
Yeah, sure. So first-time home buyers is you have to qualify for it, and 3 years prior if you haven't owned a home, 3 to 5 years depending on who we're dealing with. Again, I deal with over 200 different lenders, investors.
Go back to that because I think people forget about that. You could previously purchase a house, lived in the house for 1,000 years per se. You sell it, then the clock starts ticking.
Right.
So after that 3-year period, you become a first-time home buyer again.
Yep. You requalify, and then we just run you through the gamut and go from there.
That's kind of one of those hidden tricks some people forget about. Oh, I bought a house already. I bought 3 houses. I'm not a first-time home buyer. No, they don't look at it that way.
Yeah, not somebody in their 20s, 30s. It could be somebody in their 40s, 50s, 60s. If they haven't owned in a while, they still qualify.
You took us to that really amazing UWM facility in Detroit, the biggest wholesale mortgage company in the country. So we got to kind of see the inside scoop of what's going on in the market, right?
What's nice is another extension of our team that Chip's introduced us to. So again, as we we have a strong team of attorneys and title people and now mortgage
Title, yeah.
So it's really helped to refine it. But Marius, go ahead. I'm sorry.
But it's such an eye opener of what's going on in the market and how Nexa is basically their top customer, bringing them the business, right?
Yep.
If anybody has a product for anything, it'd be you guys as far as that, because you guys can go to 200 different lenders
Yeah.
and find a product that fits you guys. Like for example, we had the challenge with the German guys that were only in town for a year. They started a business a year ago, a little schnitzel, pretty awesome little schnitzel shop here in Sarasota. And all the lenders told them, you got to put 20% down because you're a foreign buyer. You came in, you found a lender that's only 5% down, right? So basically, not all lenders are equal. What's kind of your approach when someone comes with one of these one-off?
So you're talking about, I'm sorry, your unconventional conventional loan. So
Exactly.
Your foreign buyer would be an unconventional loan. So do you have unconventional loans?
Yeah, we do ITIN loans. We do. They'd fall under an investment loan, really. First thing we do is have a conversation, see what their goals are, what they want to do, what they're trying to accomplish. Are they coming over to buy a rental property, like our client from Brazil? Or is it like our German client who lives here, has a business, has a driver's license, a social security number, a FICO? Then he pretty much qualifies just like you and I do. So it's just getting to know what their intentions are and what their goals are, and learn about them, create a relationship with them, and go forward from there.
Exactly.
So I take that information and I go to my computer and I shop 200 different lenders and find out which one's
Give them
gonna
their
work
options
best for them. Yeah.
Right. Because Florida's just been really attracting foreign buyers here.
And that's what's nice about, and again, getting into the team here a little bit and understanding Marius a little bit as an agent with our team. You're originally from Romania, and we're from Oregon. Found us on YouTube, moved here, became part of our team. A lot of benefits added to the team from that. But you've been helping some people with foreign loan issues and challenges. So that's what's nice about having you on a team, because you kind of lived it, and now you're helping people go through it. So that's something, remember when you're coming to the team, that we have that somebody that's been right there with a lot of people that have dealt with that. And we got several people you're working with on that right now. So that's just a little character throw out there for you.
Go over to the Sarasota Florida Living YouTube channel, and you'll see the currency exchange. It's a long episode. It's about an hour long, but they go through everything foreign exchange,
right,
bringing money over here to.
So whatever Chip can't handle, we have another company that can really help us focus on that.
One situation that people can sort of look into is gift funds for first-time home buyers. Can you tell us a little bit about what that entails?
Was that fall under the challenges of down payments, the gifting?
Yeah, exactly.
Yeah, it can.
Okay.
Yeah, a lot of people don't know, and that's part of what I enjoy about doing this, is educating the buyer,
right,
and the client. So yeah, gift funds, easy. You get 20 grand from your mom, your grandmother, your brother.
Has to be relative.
It doesn't have to be a relative.
Okay.
And it's just basically is what it is. It's
a forgivable loan in this sense.
It's not even a loan. It's just a letter saying, I'm going to give this money to my son
Such
or
and
daughter to use as a down payment. You can either deposit it into their bank, or you can have it at closing. Either way. But again, it is a 100%, like you said, forgivable
right.
gift.
You said before or after. I know sometimes monies like that need to be seasoned. Does that need to be seasoned a certain amount of time, weeks?
No, not with the letter. No.
Okay, so that's any time. I know maybe with a commercial loan or other things like that, those funds need to be in there.
Yeah, if you got 20 grand, like I'm dealing with a client right now that has 35 grand sitting under his mattress.
Right.
That's got to go into your
Accounts.
And it's got to season for at least a minimum of 2 months. But a gift, like I said, you can have that wired at closing.
And is it a dollar figure or is it a percentage figure? Like say it's a $1 million or $500,000 home or $300,000 is a percentage, or is it just a flat dollar figure they're allowed to give?
Flat dollar.
Flat dollars, 20 is the max.
No, whatever they want.
Oh, whatever they want.
10, 20, 30.
Oh, okay.
500,000.
Oh, okay.
I haven't seen any restrictions on it.
Okay.
I mean, I would definitely. So one of the things with my position is before I give an answer, I like to go research it.
Of course.
Because guidelines are always changing. Different lenders have different requirements. So in a broad stroke, pretty much the sky's the limit. But depending on which lender we have to go to, they may have certain restrictions.
Okay. I think that's the biggest challenge, and Dan can talk about this, doing many different deals, especially, I think we've all with Marius had some challenging deals, but our main job is the communication, with the builder. Dan's had some builders and builder and financer, builder client, inner and external, but, having the open lines of communication, what's going on with our loan. And that's a lot of times is the unforeseen. So that's the key in this, and with having good partners.
Right.
I think I over communicate sometimes. I used to work for a guy after I got out of the military. We were both military, and he said, "Hey Chip, feed the bear. Don't make me come and look for answers. You tell me what's going on.
No, I like that.
And if you have a problem, come with a solution." So that's kind of how I do things now. So I like to give a Friday update to all my realtors with clients that we're working with. Hey, this is what we're doing. This is where he's at with the, loan process.
My final thought on this is on the down payment part is that I love working with Chip. I just love the fact that he always finds a program. He always figures it out.
But I think that's what makes us a good team, honestly, is because you guys are the front-facing customer service guys. You guys are the ones that sell it, right? You guys take care of the customer, but I'm behind the scenes, which is where I like to be, and making things happen.
Support.
And thinking outside the box and finding a how, not, the answer is never no, it's how.
Everybody has their different things they're trying to accomplish, and that's the biggest thing I think what Chip was leading to, as us being a front face, is our goal is to get to know you, figure out how we can help you with your plan, because everybody's plan is different. They all kind of end the result of the purchase of a property, but some are, raising a family, some are retiring, some are investment. you know, there's hundreds of reasons why you want to move. You just wanted to get out of the snow. You know, you want to have a second place to come to. So we just need to kind of hear that story, put everybody in the right spot, and kind of get there, you know, as painlessly as possible. I know, Jim, we were talking about some questions. I know you had a specific question for Chip. So, you know, what you got there?
You know, down payment is important. Once you get through the process, you get your down payment. You know, we're past qualification. We're in the middle of loan, and always the last thing that creeps up is how much is it going to cost me. So,
closing costs.
as realtors, again, going back to the scope of our license, as a realtor, we're not governed by law that we have to give a net sheet. But Dan, you know, Marius, we all do a net sheet, and I always, this is estimate because we got prepaids, we got, you know, taxes back and forth, but always a closing cost is always a big question because it's kind of it's the unknown, and especially with the mortgage, because cash deals have a different set of rules, but with mortgages, you know, with the note, there's going to be other financing fees. You know, you can talk a little bit about, you know,
Understanding the closing costs?
yeah,
What we do is we have what's called a loan estimate. Exactly what you were saying is the prepaids, your taxes, your insurance, how much is, you know, what do you have in escrow, all that stuff that's going to go into it. We have to provide that to the client. What a lot of people that probably about half, I would say, that I deal with think, okay, I've got my down payment, I'm good to go. Well, wait a minute. And then you give them the LE, the loan estimate, and they're like, well, what is all this?
Right.
Well, these are the costs
To do business.
to do the loan, and some of the prepaids, like you said, taxes and insurance and all that stuff. Your HOI is going to have, you know, your HOA, excuse me, is going to have to go in there. It's just something that half of the people that I deal with don't realize, and that's again part of the education of this is, well, this is what it's gonna
talking
take.
about that
So,
stuff up front, you know, so you're not surprised at the end saying, no, okay, we're in the process.
Right.
Remember, as we get to the end of this, these are going to be some of the fees, but we talk about that long time ahead of time with your clients. I know,
Right. Yeah.
you know,
but yeah, we could talk hours about closing costs. But so in that closing cost, when do they receive those numbers through the process? We're a typical close 30, 45 days. When do they get those estimates?
Right up front.
Right up front.
Yeah. So I'll provide a loan estimate, and then they'll sign an intent to proceed, ITP, and then we'll go forward and we'll start generating closing docs, and we'll start working really very closely. And we've already gotten a lot of the close to finite numbers from title, insurance, things like that we have to, you know,
incorporate.
incorporate already. So we'll have that, and then as we get closer to closing, then we'll obviously really dial those numbers into like the pennies,
Right.
and balance it out at the end.
And I'm sure Dan and Marius too has always had an instance where the buyer or the seller wanted to contribute, and because we always have so many percentages, this percentage down. I think is it 3% for the max? Or what's the
Contribution. I think different loans are different. You were just telling me the different loans have different requirements.
Different requirements for different loans, and depending on how much the buyer puts down on a conventional is how much the seller can contribute.
I mean, this whole conversation has gone to, you know, we've kind of discussed as part of the loan process. We started talking about mortgage rates, and we went into some of the challenges of down payments, and, you know, now we're here at closing costs. But that process is pretty seamless when you're working with professionals. So the idea is to get everybody to the point they want to be and reduce frustration. I know one of the biggest things you need is all the information from your customer as upfront as possible, so you can get that process going. You know, I've seen stuff fall apart because they didn't quite give all the stuff, you know, to you. And then, some people decide they don't want their job anymore at the end of the process. Those are killers, you know? But, you know, any final thoughts on, you know, probably the loan process, or, you know, we're going to have the information to contact you. And I think the best way as we proceed through these processes and these podcasts is we just want people to feel very comfortable and turning to us and say, you know, where can we get the right answer? You know, I just want the straight skinny. Give me, you know, I don't want any fluff. I want to know what's going on. And I love, and you know, you have military background. You're kind of right to the point, but, you know, this is what it is and this is what it's not. You know, and I love that whole process because there's no, you know, behind any curtains here. You know, there's nothing crazy. There's no puppet master. We're here to say, let's get you into a home. This is the process. You know, what can we do? So any final thoughts, or, you know, Jim might have
that's
one more
what
question.
I do, because I've been on Chip's website. It's linked to my website as well. I put him in there as my preferred lender, so you can go to my website, click on it. But you have a very clean website. I know right now the website game, online game, is huge because it needs to be approachable. You've got a lot of tools on there. It's Sunday afternoon, and we're running around. Hey, do me a favor, go to Chip's website, because you have your free tools. You got calculators. It gives you all the loan programs on there. Conventional, FHA. I don't know where I belong. Start at FHA, you know. But, you know, I'm a calculator. You can go in there. You can calculate your mortgage. So there's a lot of good information on there. And again, now that we are so technology driven.
Yeah. So the website's a broad stroke on things, you know, and like we talk, if we did your loan, Jim's loan, Marius's loan, it's going to be 3 different loans.
Sure.
I mean, you guys could have all the same credit, but you might have a different down payment.
Right.
You might have different assets, right? Or it doesn't matter. But everybody's loan is
Completely different.
a very individualized, specialized loan.
Right.
And that's how it's kind of how I approach it.
Well, that's what I'm looking to build. So going to UWM, you guys brought up when we got some great terms, but the USDA loan, I'm looking to build. I might be in that program, you know, and I might not be. Also, veteran, I do VA. I've done VAs, but like you said, there's a different program, and everybody might be. It's not going to be in the same box for that.
Kind of to piggyback on that, you know, like when I talk to people and they're like, well, why should I use you? I'm like, well, because I'm an independent mortgage broker and I can deal with, you know, 200 different lenders. When you go talk to your bank down the street, they're going to work on a program, maybe 2-3 different lending programs.
Right.
You know, A, B, and C.
That's in their program only.
Right. And they're not going to do all the way down to X, Y, and Z. So I can do all. If there's a square hole, then I can find the square peg.
Yeah.
And then we're going to make it work.
Well, I mean, like you said, the big banks, they have a very vanilla platform. You're more individualized. Tell me your situation. Tell me what you have and what we're trying to do, and then let's find, you know, the connection. And that's why it works for us is exactly how we do with houses. You know, that's what we're trying to do here. And I think, you know, as we go forward, the Sarasota Florida Living podcast in this group format, we're always going to be striving for what it takes to move this area, what it takes to move to Florida. If you have questions, you put them in the comments. You want to pick up the phone, call us. If you need to know about loans, there's a QR code, or pick up and call the phone, call Chip, because his information is down below this video. We appreciate your time in, Chip.
Yeah,
you know,
thanks for having me.
You know, we're going to do this more often because, you know, as you said, the mortgage rates change so often. You know, we have to talk about this at least monthly to have like an update. So, you know, I hope we can make that happen. I'm sure we will. And, you know, we work together every day. So let's, you know, figure it out. You know, I appreciate Jim and Marius being part of the team, making it better. And you're going to hear a lot more from us. So thanks for joining us on that podcast. Thank you, Chip, Marius, Jim, for all that information. And if we can help you in any way, just give us that call, shoot us that text, or shoot us that email, and we'll be there for you. Hey, until next time, have a great day, a wonderful week, and a wonderful year. Thank you so much.